Hey, good morning, everybody. How you doing? Today is, oh my God, it's a Tuesday. Tuesday, May 23rd, 2017. Best day ever. Damn. Hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is McDonell. Ni hao! Jumbo! Oh, clicked the wrong button. Jumbo! Jumbo! Probably mispronouncing it, huh? My Swahili's a little off. Anybody speak Swahili? I think I'm saying it right. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I am here to help. I want you to succeed. It's in my best interest for you to succeed. So I'm here every single morning, day after day after day after day, Monday through Friday. I'm here at Forex.Today, except the first Friday of the month I'm over at FX Street, where I do non-farm payrolls live, which I've been doing for more than 11 years. Former winner of Forex Speaker of the Year, Best for Educational Webinar, Best Special Event, Best Forex Blog, Best Forex something, I don't know. So anyways, I've been around a long time and I'm willing to share because, well, that's why I'm here. I want you to survive because the longer you thrive as a trader, the more you're going to trade. And as a service provider, TradersWay earns an income from that. So it's in our best interest for you to succeed. I think that's good. It's a real symbiotic relationship. I don't think you have a problem with that, right? Spreads are very competitive. Execution speed's quite fast, faster than the big boys. Yeah, so what more do you need, huh? So ask questions, get involved, participate. What I call participation is how you succeed. Tom says, "Great broke." Tom, are you really Scottish? It's a great. Oh yeah, hang on, I gotta change this. And then I need to make this smaller, and I need to, sorry about that. I have one of these days today where I think if I worked all day without distraction, I wouldn't be able to get through it all. All right. So anyways. Thank you, Windows. All right, let me do it again. My dog's with me today. I hope you don't mind. All right. Let's start with the obvious if you don't. Do you mind just starting? Do we just jump right in? Am I supposed to warm you up or anything? We did the music. You did the disclaimer. I don't know. Let's just go, right? Let's rock and roll. Yeah, we don't have time for foreplay. Here we go. Oh, I wanted red. Okay. So this cluster we highlighted yesterday, and we said, what if? That's called analysis. What if the end to the euro rally is near? Now this is euro yen. We were thinking about euro dollar coming to an end. Why? Before we go any further. Why? What would be the reasoning for us to say, well, what if euro yen is near a top based on euro dollar? I think that's Irish though, isn't it? It's above the monthly target, strong resistance, and let me give you a clue. Last year, ECB, no fly zone. There we go. No fly zone. It's this thing I came up with a year ago, quite literally a year ago, when we were analyzing the euro yen or euro dollar. I said, hey, isn't it interesting every time we get to this 114, 115 area, the euro dollar tends to just fall? We've seen it 2 or 3 times in a row. I'm like, I don't know, but wouldn't it be interesting if it's the ECB saying, hey, a strong euro is not helping any of our policy targets of creating inflation because a rising euro is deflationary. So I said, well, wouldn't it be interesting if the ECB says, dude, right? They tell their desk, they're like, dude, get 114, 115, dump it, eh? So there's some sort of like inner city Canadian in charge of the European Central Bank's dealing desk. I don't know. But they say, hey, man, 114, 115, that's the number. Dump some euro. Of course, what they do is they buy bonds. Right? Money supply shifts to the right. Right? So increase in money supply, decrease in valuation, euro comes down. So I said, well, wouldn't that be interesting if you could trade knowing that you got the full faith of the ECB behind you? So anyways, that's the idea. We don't know if that's valid. It could just be nonsense, right? Could be nonsense, right? It's like getting a stock tip from the Renaissance Fair. So anyways, if that be true, if ye be true, then maybe this comes down, right? But we talked about this yesterday. Notice where we were yesterday. Was there any sign of this maybe potentially reversing? No. So we said yesterday, where would the 2 places be for potential reversal? Well, obviously a lower high in here. Let's call it a 786, right? And a pivot cluster. And then, of course, the other potential would be a double top. Which one seems most likely now? Yeah, the pivot cluster. The first one, the nearest one, where we are now. And that's called a plan, isn't it? Seems to me you could have been waiting in an ambush, hiding in the jungle, waiting for a scenario like this, right? So what's the next scenario? Maybe something like that the rest of the week. Now, why this bigger bounce? Why almost like a double top of a double top? Yes, the 55, correct. The 55 is going to, and of course the weekly central is going to, because this will be like this, right? It's going to produce also a lower high double top, okay? So just the same pattern basically, just on a smaller scale. So, if there's psych levels in here like 125, that could be good enough. There's a psych level there, but even just above that is the pivot cluster. So who really cares? Doesn't matter. Their stop's going to be in the same place either way, right? That's right. So we might be running the water right now, huh? Drawing the bath. Okay. And of course on this, right? we might just be thinking something like this. Now, notice last week, because we knew this was ripper hot, this euro yen was going up like crazy. You might have even heard the people on TV talking about it, which means as soon as they talk about it, you know it's going to come down. Look how fast it came down. Remember, nobody knows why. It's all a random walk. And I would propose that it's because that's the pivot profit zone. See, nobody knows. Nobody knows what's going to happen, especially if they're ignorant. You're ignorant, as Michael Jackson would say. But seems to me this is where that type of price action is supposed to happen, right? Is that Prince's name? Yeah, it looks like Prince, right? Anyways. So, quite a coincidence. So, I don't know, what do you do? Well, I'll tell you, if I were me and I wanted to sell some euro, all right, maybe it's not today, maybe it's not this week, but if, let's say I did sell some euro dollar, let's say I wanted to sell some euro dollar. Let's look at this, okay? Like I said, I'm not saying it's now. But, okay, let's pretend. If later this week I decide to sell the euro, and I suppose it really depends on if it's first touch or second touch. But let's say when the market is showing signs of bearishness, which it ain't doing. But let's say it did, I would be long-term short. First of all, I am bearish on the euro still. I understand a lot of this is fund flow. But one theory I have is between the beginning of June and the end of June, we're going to have a Fed meeting, which is still likely to raise interest rates. Maybe they don't. We don't know. And of course, if they don't, then that explains the dollar weakness. But I have a feeling, because we've been saying it a long time, that they will do a June rate hike. Maybe September, but and for sure, let's say December. Scenario 2 would be more like June D's. Okay? But let's say they do a June meeting. And June is a great time to raise interest rates. Right? So somewhere in that 3-week period, the dollar gains some strength again. Yeah, okay. That's the idea. Now, what if I'm wrong? I probably won't get a trade set up, so who cares? Okay. So does euro dollar look like it's time to dump it? Let's go back to this. No. Not yet. Okay. Weekly R1 is 113. Okay. Weekly R2 is 114. So yeah, maybe Friday, if we're up there. Okay. Like the easy pips, the lower risk pips, so to speak, the predictable pips, so to speak, are gone. So tread cautiously, right? Like you're walking on thin ice. Okay. Swing traders. So let me remind you, last week while this was falling, in particular as we were nearing the target for the week, we talked about the Kiwi likely being mispriced by the market, and the market is stupid because doesn't know what's going on, and that this could be an opportunity to make money because just quite literally the Kiwi's going the wrong way. The market says down and the market's wrong. How interesting is that, huh? Did anybody learn anything? Fundamentally or technically? Right? Isn't some of your job to realize that there's a mispricing or inefficiency in the market? In a way, your job is like an arbitrageur, is to find these inefficiencies and mispricing. And suddenly you're like, I'm going to buy the Kiwi and sell the yen. Nice little arbitrage, right? So somebody did learn something. So 5 people learned something. You willing to share what you learned? What is it? Oh, I can't put it in words. The first time you had observed, can't quite fit it in the mispricing. I see. It's, yeah, well, maybe a better way is just to, it had to do with correlation, right? And in particular, intramarket correlation, right? Where we were using our alpha, our analysis of global dairy prices and its traditional or historical correlation to the value of the New Zealand dollar told us that as the New Zealand dollar was falling, there may be a mispricing. Interesting, huh? Mickey says dairy prices are a lagging indicator. All right, fine. Call it whatever you want. Okay, so then we just got incredibly lucky again. And notice where it reversed, where every bear was supposed to get out of the market. Right? Okay. Gap down to the monthly pivot, gone. Target this week, 78.56. No, that's monthly. Yeah, 78.56. And it's relatively close to this weekly R1, huh? So that means maybe more like 79, 79.50. Ooh, that's as clear as mud. Yeah. Well, I don't know. I don't know if I'm not that confident it's going to make it that high early in the week. Well, I can't. Like maybe we get higher than where we are. Maybe we get higher than this week, but I don't know. Okay. See, if there's an uptrend, I'm a confident bull or aggressive bull or whatever. But, and that is a big but, we're not in a bullish uptrend. So this is almost scale out time. Right? Like a fisherman, once you got some fish in the boat, you start scaling. Yeah, like maybe there's 25 pips more in this. How much do you need the other 25 pips? Right, so if you bought it at 76 something, let's say 77, you're now up 125 to 150 pips. Do you really need 175 pips to feel good about yourself? Okay. So there's your Kiwi. Look at the dollar yen. Very neutral, eh? Not a lot happening there. Hey, Daniel, I got a list of things that they need to know first. No flats, no max, no sticks, no stems. All right, so anyways, yeah, I guess we need to adjust this. It looks like we're getting ready for a hesitation. Hesitation, as they say in Betty. Interesting, huh? Maybe starting to roll over. Maybe. So, can you see what we've done? We got reverse fibs going. Okay, do you remember going through this? I bet you don't, so we can go through it one more time. Okay, the first part of this analysis says there's the low, there's the high, all right? And what do you think? Did this 618, or sorry, did the 786 happen randomly? No. Now, I'd rather it be 618 than 786, but it's also a pivot cluster. Okay? I believe that was the beginning of May, and it was already the target for May. Great, whatever. Good, fine, fine. Because that's why how we came up with 1217, right? Now, this is an interesting thing because now, changing colors here, now we've changed the analysis. Now we're using this as high and low. And this right here that I'm circling is the 618. That's why we have this coming around. Because if a bear was going to get involved in the market, that's where a bear would sell. Isn't that cool knowing that? I mean, we did draw this way back in here, right? Do you guys remember now? Looking for the reverse fib of where bears would sell? So the two things going on in this market is the bulls are in blue, okay? And bears are in red. And bears need the bounce so that they can sell high, in which they did. Okay? See this line with the jibbly jobbly stuff there? That's the 618. So this double top occurring is occurring exactly 618 of the drop. So it's these bears here. I guess I got to go back to red, right? There's bears here. This is bear country. Okay? Okay? And the 786 on the bulls shows that they're not very confident, right? And you may recall, all I said was 1217 would be the low of May. And it would likely rise. But will it be higher in June? I never said anything about that. I said it could actually head back down. And if it headed back down in June, it would happen here. But on the third day of May, we had already concluded that 1217 would be the bottom of the month. Bottom doesn't mean reverse. Bottom just means the lowest price. So will it not go up from here? It could go up from here, but I'm not entirely certain it will. And of course, 3 weeks ago on the 3rd of May, that's what we were saying back then too. It will probably bounce, most likely bounce, okay? And the areas you got to worry about are like psychological levels, pivot clusters, and price action. Okay? Price action is about 50%. In fact, if you actually grab the wick instead, then you get your perfect 618. Okay? And now you can see from this information, right, that we had an up and then probably down. And the reason probably down is the 786 predicts a lower high or double top. Right? Right? We also need to be sort of wary that it just produces consolidation and we're moving into a sort of a summer period. Okay? What do you think? Okay? I'm thinking if we go into consolidation, we're just going to play this line and this line, and there's our range. Between 1200 and I don't even think 1300, 1250, 1260. We sit here for a while. Which means what? Fed raises interest rates in June and then says data dependent, and then as master debaters, you know, what do they say? You ask 13 economists and they'll give you 15 different answers. So then what will happen is we debate all summer as master debaters. We debate all summer whether the Fed's going to raise in September or not, which means the market won't know, which means why would the market go anywhere? Gold is going $5,000 an ounce. Okay. I would have believed you at 4,000, but 5,000? That's ridiculous. Yeah. So right now, as you probably know, gold is selling at $39,400 a kilo. Oh, is that right, Nick? Yeah. Here's the interesting thing. If you got big money, gold is actually selling at a discount. If you have big money. Like, discount? So, how'd you like to buy like a $100 bill for $95? How much would you buy? It's interesting, huh? You got to have big money. Yeah, Anthony's like all of it. Yeah, as much as you can get. Yeah, all right. Oh, there's tons of deals, Ryan. Tons of deals. Tons of deals. So, beep, 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 beep. So buying out of the futures market is the futures market's designed to hedge. Let's just put it that way. All right, kitty cat. Wow, we got lucky on this one, huh? Another lucky one. This rally and the drop to the 55 produced the lower high double top scenario, which then produced a lower low scenario, which would produce a false rally scenario and a downward target. And we predicted it so far in advance that none of this to the right had even been printed yet. And we're not even able to draw any farther than this. So, I don't know, man. I think if you can predict it with reasonable accuracy like that, then it's not only predictable, it's teachable if you do a good job, and if it's teachable, it's learnable. Right? So what do you think? I swear we predicted this price action from this drop 2 or 3 weeks in advance, that because of this drop here, the lower high to lower low to lower high to lower low, 3 weeks of price action in advance based on one thing. Right? Is that how you remember it? Where I open up a chart, the thing's been rallying, skyrocketing for weeks, and I'm like, oh, look at that. Forget it. It's all over. It's all over. That's it. Look. Right, and the interesting thing about that is, it's my observation of the markets 15 years ago, teaching myself technical analysis, that said, wow, I wonder why it bounced there. I wonder why it did this. I wonder, and I just tinkered and tinkered and tinkered and learned and observed and adjust, right? Scientific methodology for hours and hours and hours and hours every day. Just hours and hours of observation, but careful observation, serious study and analysis, and then experimentation, observation, and more analysis until I got to these things. Okay? So, I'm grateful to have survived. Oil. Yeah, oil's just doing what it's supposed to do. A little dip back to the 21. Rise it up. Moving on up to $54. Yeah. Well, actually, 53 maybe this week. Probably not even that high. Okay. Cool. Oh, Mickey says, in the early years, survival. Oh, yeah, Mickey. I survived because I made survival my #1 goal. Right? So some people get into Forex because they're chasing something better. I started Forex. I already had something good. So it was funny. Like before Forex, I already had some. I don't know. I had some success. So I'm in the hot startup issue of Inc. magazine for 1999. I'd been in Japanese newspapers, European newspapers, 3 or 4 American magazines, all before Forex. And I was, I did pretty well in the Silicon Valley and made my way up to a really interesting job. So, I didn't go into trading like I think most amateur traders, and I was as amateur as you can get. I'd never even seen the financial market before. But so I looked at it as a business, and this is why I did things like business planning and pro forma cash flow statements and stuff, And I treated it like a business from the beginning. And I think that's a bit different. But I was coming in, like, for example, when I was 20, I ran an organization of thousands of people with 27 offices across the United States, right? And then I went to the Silicon Valley to conquer the world. So I've always had this sort of mind, right? And so I brought that baggage, good and bad, by the way, to the table, and I looked at it as any other businessman would. And think of someone that is a good cook. I'm a good cook. You cook real good, right? And then they borrow a whole bunch of money from a bank. They lease a restaurant, but then they have to invest all their money to fix it up, decorate it the way they want, improve the kitchen, maybe do some marketing and advertising, hire the wait staff and train them, buy all the food, and hope that people show up and pay them. And what? After 6 months, they're dead broke because there's just not enough people and there's too many upfront costs, and they die. Well, that kind of sounds like an average retail Forex trader, doesn't it? They're like, I don't know what I'm doing, so I'm going to invest $5,000 into an account. I have no idea what I'm doing. And, oh, boo, 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 boo. They start trading like it's Call of Duty. And they're like, damn, I'm out of money. And they go away. I, however, did it different, right? And I looked at it. My number one goal wasn't to make money. That's why I wrote it in my book. There's a mantra. There's a mantra. And the number one goal of that mantra is to not die, not to do something stupid and get myself killed. My number one goal is not to lose money. And I think amateur traders come in and like, their number one goal is to make money. Probably because they don't have any money, right? So they're like, I need this to work, right? I'm dead broke. I need this to work. I'm just going to throw everything at it, even though I don't know anything. Well, but that's not how success is created in any industry that I can think of, right? So in reverse, I did things like trade 2 years on a demo account, and I studied very particular things. But I had to figure things out. So maybe being forced to figure it out was a good thing. I can't imagine it would be, but to really seriously ask deep questions like, why does it do this? Like, that's interesting. And I didn't even know things like non-farm payrolls. I didn't even know there was news. I mean, you guys are starting out way better than I had it. I knew nothing. And you think you know nothing? I know way worse than you when I started. I knew nothing of nothing. So I had to start out with that attitude. And what did I do by like my 3rd or 4th year of trading? Right? I got my business plan. Right? I did 3 or 4 or 5 years of pro forma cash flow statements, broken out to the day, 5 years in advance. Right? Did I have a long-term vision of my Forex trading business? You know, they're saying Trump is an idiot because he just released a 10-year budget for the government. I'm like, idiot? That doesn't sound like an idiot to me. Right? What kind of business just plans 1 year in advance and they're like, I don't know, we'll figure it out next year. And we won't have enough money, we'll just borrow more. And then, right? You know what I mean? So I think I have to be a businessman, and you know, money is important. It's not as a measure of success. Like, you know, these guys that are sitting on their Lamborghinis like you should be in Forex. Who believes that nonsense? Hi, I'm 20. Right? I'm 20. I'm in a Lamborghini. All you need to do is put your money in Forex. Right? 2 million views on YouTube. Really? Wow. Scum. So, it's a business, right? I'm not a businessman. I'm a businessman. So, you know, look at the long term. So when I looked at the long term, it allowed me to remove stress and the burden of making money now. Because I know if I can keep my goals conservative and if I stay disciplined, on the long term, I make good money. Okay? So that's all I have to do. Stay focused. Stay disciplined. That's it. Little goals. It's called a business plan. You ever notice that? Ask a salesman or salesperson. How many sales are you going to make this year? I'm going to make $1 million. Right? I'm going to make $1 million sales. All right, good. You're the #1 sales guy. Great. So, let's break it down. How many sales are you going to make? I'm going to make like 100 this month. I'm like, oh, okay. Well, how many contracts do you need to send out? Like, what percentage of your contracts actually get signed and closed? Oh, 50%? Okay, good. And how many presentations do you do in front of a client before you send out a contract? Oh, 1 out of 4. Okay, great. And how many follow-up phone calls to initial presentations do you have to do until they're actually saying things like, send me a contract? Oh, 1 out of 5. All right, great. And how many presentations are you doing per day? 2, maybe 3. Okay, great. And how many cold calls are you making to get those? Right, so you're like, all right, so according to your numbers, you're going to make 22,000 cold calls a day. Great. Right? Great. So turn it around. How many, so how many pips are you going to make? I'm going to make like, right? Or how much money are you going to make? Because really it comes down to money in trading, right? How much money are you going to make? Oh, I'm going to make like $10,000 a month. I'm like, oh, good. And how many trades are you making a day? 5. Okay, good. And how many pips on average are you making on your winners? Oh, 25? Okay, great. And what size are your losers? 40? Sometimes 200? Okay, great. So the net of that is 12 pips a day. Okay, good. What's your account size? I have $500, but I'm going to make $10,000 a month. All right, good. So you're going to be leveraged 458,362 to 1, right? You're like, oh, that might be a problem. But, you know, isn't that what a businessman would do? Or a person, a business, I don't know why I keep saying businessman. Wouldn't a business person, wouldn't an MBA do that? They're like, oh, good, let's just break it down. Let's just check the math on this, right? And if you actually check the math, what are you going to find out? Two things. You don't have enough money and you're over leveraged. So, then what? What's the secret to success? Grow your trading account slowly over long periods of time. You won't make $10,000 a month this year. You won't make $10,000 a month next year. But if you just bust it out and you improve your stats, first of all, those stats are crap. That's probably where most people are. But once you improve your stats and you're slowly growing your account size, your winners are bigger, your losers are smaller, your winning percentage is better. But then if you just looked at it, okay, right, just looked at it, and I said, here's the math based on your results, and not your results in your first year. How about your results in your third year, okay? Now you know how to trade. Your winners are fine, your losers are fine, your results are, percentages are fine. You're just fine. You're a fine trader. Great. Now you take that, and you say, let's look at the math. And if you just follow this now, right? Grow your account size, pay yourself a little. Grow your account size, pay yourself a little. And by the way, as your account size grows, your lot size grows, but even at a slower pace than your account size is growing. So your account is getting bigger, but your risk per trade is getting smaller, which is where you want to be. And I said, okay, you just continue doing that. And in 76 months, you'll be at $10,000 a month. And you'll have, you know, $150,000 in your trading account. Now, all you have to do is do this. You start small. You're not going to make a lot of money this month. Next month will be almost no change. Next month after that, almost no change. Month after that, almost no change. The first year, you won't make that much. In the second year, you make a little bit more. In the third year, and all of a sudden, great compound interest, exponential hockey stick type stuff. But all you have to do is follow the plan. That's called a business. How does that sound relative to just sitting down trying to make as much money as you can every day? Yeah. But now you're focused on being methodical, right? Don't you think? Now you're like, oh, my goal isn't to make as much money as I possibly can today. My goal is to stick to the plan. Never risk too much, because God forbid, if you have a bad day and you have a significant drawdown, you're like, oh my God, that took 6 months out of the plan. But also, you know what, guys? What happens when you're using compound interest if you throw away 6 months? What happens to the end? Let's say the last 6 months. Yeah, Peter brings up the obvious, but the obvious is often hidden, right? Yeah, you're supposed to be getting better in year 5, in year 6, and year 7. Your stats should improve and improve and improve. But we're not counting on that, right? This is why I call minimal acceptable performance, MAP. So yeah, you should be getting better. And yes, all of a sudden you're getting like seasonality things, like all of a sudden you're selling yen at one particular, and all of a sudden you're, 3 months out of the year you're making 10,000 or pips or more. And then you're already preparing for the big repatriation flow the other way. Maybe you pick up 3 or 4 more thousand per month that way. And then you're preparing for other seasonality issues like low volume and volatility. So you're taking profit before the crash instead of adding more, and then you switch your trading strategy to shoot at rapids, and and all of a sudden you're working the system in your favor. Yeah, but not including any of that. Just sticking to the plan. You see what I mean? So much better. So much better. And that's what businesses do, by the way. Right? This is what economic data is about. Right? Retail sales up 1.2%. We track these things, right? So how's your trading going? I don't know. What's your plan? I don't know. I don't know. So, right? Does that help, guys? And I think we have a few newer people in the webinar, so that's probably, informative for some. Something else that people have heard many other times, right, for others. Right? And remind yourself, so I actually did these things. I did have pro forma cash flow statements. I did write a business plan. I had board meetings. I had agendas. I emailed myself the agenda. I had someone attend my board meeting over conference call. I took notes and meeting minutes, and I put it on the Ritz-Carlton letterhead. I took it as serious as you possibly can, like ridiculous serious. But I'm ridiculous. I'm a ridiculous person. Right? But that's who you want to be your fund manager, right? You say, you should see this guy. He's ridiculous. All right? Oh, you should see my guy. He's like everybody else. He does everything like everybody else. You right? Nobody says that. This guy's like every person you've ever met. No, someone says you should see this guy. He's unique. What a unique, crazy. I like crazy. I like different. I like ridiculous. Do you guys remember my speech a long time ago about ridiculous, sickening work ethic? I know I'm supposed to sit on the hood of my Lamborghini Aventador and say, oh man, all you need to do is throw money in a Forex account, bro. Right? And you can have a car like this. You can have a girl like this. I drive a golf cart. I have a wife and 2 children. They're getting a good education and, raised with good parents and live in a safe neighborhood. That's my sales pitch. And is it easy? No, it's not easy. So what do you need to succeed? Sickening, ridiculous work ethic. And all you need to do is learn the skills for 2 or 3 years, then create a long-term business plan, right? And trade with a 5-year outlook, broken down day by day, so that you can slowly grow your trading account and reduce the risk, all the while paying yourself hardly anything. And then at the end of 5 years, if you want to buy yourself a Lamborghini Aventador, go ahead. You've earned it. If that's important to you, you'll earn it. but most likely you'll do what an adult does, invest into some real estate. What kind of child would throw $300, $400, $500,000 at a car? Buy a house, bro. Houses go up in value. Right? But if you got to buy one to feel good, sure, everyone's got a dream. Buy yourself a Lambo. Your mom won't be proud, though. She'll say, oh, my God, really, son? That car's ridiculous. Not in a good way. She's like, really? How much was it? Oh, Mom, you'll love it. It was $400,000. $400,000? Yeah, but Mom. Why don't you get married? Why don't you have some kids? Why am I going to have grandchildren? Oh, no. This will help me find my wife. Yeah, Lambo in a trailer park. Your children are running around the streets in diapers and no clothes, and you're like, I got my Lambo. So anyways, like, dude, look, it's a business. It's a business. Love what you do. Take it seriously. Crying out loud. Right? If you want to buy a Lambo, buy a Lambo. But I'm telling you, there's bigger things in life than that. Buy it. You know what poor people buy, right, are things that make them feel rich. What do rich people buy? Things that make them money. It's a difference, right? What's the secret in life of being rich? You feel wealthy. Well, rich is poor, right? Right? Assets. It's not toys. A friend of mine bought like a $14,000 jet ski the other day. I'm like, $14,000? She's like, yeah, but it's got like 1,000 horsepower. Look, 1,000 horsepower? Like, when do you go to a lake? Like, what do you, like, oh my God. When do you, and he's like, no, actually, no, I don't really ride these things, but it was a great deal. It's only 14 grand, and I can just like zoom around the lake. I'm like, you go to a lake? When do you have time for going to a lake? Yeah, but how much money is that going to make him? Oh, it's gone. Nah, he doesn't like it. It's too fast. Of course it's too fast. It's 1,000 horsepower. You should buy, right? Buy an asset. So while you sleep, you wake up and you made money. Right? Try to explain that to my nephew. I'm like, how much do you make per year? And he's like, blah, 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 blah. I'm like, oh yeah, well, my house made me that much money and actually quite a bit more. And I didn't have to do anything. No, I don't even mow the lawn. He's like, what? I'm like, yeah. So stop paying rent. Buy an asset. Have it work for you. Have your money work for you, right? Look how big my TV is. Woo! Your big TV, right? Look how fast my car goes 12 miles an hour. Pedal to the metal. Slows down when I go up a hill. Yeah. But it's got regenerating brakes, so when I go down a hill, it charges the batteries. Yeah. But, you know, I waste my money on things like assets that appreciate in value, and I'm throwing the money away at Harvard. There's a stupid, but everybody's got a hobby. Some people, members of the country club, I'm a member of Harvard, whatever, right? So, I don't know. I don't know where it all goes, but just think of it this way. Think like a business, right? Take it really serious. Don't treat Forex like a video game. Don't get lost in the get rich quick crap, right? Take it very seriously. You can make a lot of money trading Forex, there's no doubt. It's unlimited, really. Right? It's a function of risk, and I want you to have low risk. So what I'd rather you do is just it's I can't think of a great analogy. It's just going to a factory every day. Just check in, check out, check in, check out, check in, check out. It's just a skill. It's just what you do, right? And it gets easier. You get in tune. You know the trends. You know what's going on in the central banks and all that kind of stuff. You get it. And you're watching gold and oil. You can talk about it. It gets easier because it just becomes who you are. It becomes natural, right? And it's things that you enjoy. Like, why would you want to be quick about it? Because to be quick about it, you're going to have to take risk. And in the early years, your skills are not good. So taking on risk just means you're most likely to lose, and then you're out again. So why not just say, you know what? This is what I'll be doing 10 years from now. Just be okay with it, right? Enjoy the plateau. It's going to be slow and tedious for a very long time. But if you can do it, based on the mathematics, as long as you don't screw it up, you will make more money than you need. Now, oh, I forgot about the old comment. What if you screw up now and you give away a bunch of money on a big drawdown? And I said it costs you 6 months. And you're like, but, right, 6 months, you have to work for 6 months just to get back, right? You know what happens? You make most of your money in the last 6 months. So you're like, you have a, let's say you have a $10,000 account, but you lost $2,000 on something went bad, and it was a big learning experience for you, and you're like, it's only $2,000. In 6 months, I'll be back to my, I'll make that back. If I stick to the plan, I know in 6 months I'll be back to where I was. But the last 6 months, you might be making $75,000 a month. Right? So it wasn't your $2,000 drawdown, right? You lost 75,000 times 6. You didn't lose it this year. You lost it 7 years from now. And that's how I treat things, right? Because now I got to decrease that. I'm like, oh my God, that just cost me like a fortune. So you stick to the plan. It's not just $2,000. It's not just $500. Oh, Wayne, it's only a $500 account, Wayne. I've never bought into that logic. Never. Because I'm thinking ahead. I'm always thinking ahead. So if you just lost $500 this month, and you're like, oh, Wayne, it's only $500. I'll just pop in another 500 and I'll go back to trading. No. I'm in year 7, right? And so I'm like, dude, you just threw away $40,000. No, Wayne, it's only 500. It doesn't matter. Oh, it does matter. It doesn't matter if you don't have a plan. Right? So anyways, I got to roll, bro. It's been real. Got to jump, babe. Will we be here tomorrow? Sorry, we got caught up in the talk and we did some analysis. We didn't do an amazing amount. But I don't know, maybe sometimes we just need to twist and turn to this corner every so often. Okay? But I want you to think this way. Right? So, peace on earth. May the pips be with you. May our profits be above average. And I'll see you tomorrow. Thank you for being a client at TradersWay. And if you're not, and you like what you've seen today, and you want to hang out with us day after day after day, you need to open an account at TradersWay.com. You do. Right? Don't be a lurker. Right? Come on. Right? Make your mother proud. By the way, if you do buy a Lambo, an Aventador is fine. Just don't get the Gallardo. Come on. Have some self-respect, huh? All right, see you tomorrow, guys.